Jim Rogers is with us this morning as guest host. Jim, great to see you again.
I'm delighted to be here, Jeff.
What are you doing at the moment?
I've just flown in from Tokyo, so I'm full of jet lag and everything else.
Yeah.
What am I doing new? I'm buying agriculture, I'm buying renminbi, I'm buying Swiss francs, I'm buying yen. That's more or less it. I bought a few things last week, and I shorted a few more things last week.
All right. Sounds like the trade from last year. Really, you just sticking to your guns?
No, I would hardly call yes, the Swiss franc and the yen I was buying last year, and I continue to buy, yes. I don't change very often, Jeff. I don't jump around. I'm not a very good trader, short-term trader, and so I make a few decisions and stay with them.
Hey, we're going to move on and talk a lot about China and commodities with you this morning, but since you've just got off a plane from Tokyo, you know, our last guest was talking about 60% of the Japanese market now trading below book value. Do you see tremendous opportunity here, or a market that is still moribund?
Well, I own shares in Japan. I haven't bought any more recently, but I certainly am watching to see if I should. The yen is a better play. The currency is a better play for me right now. Actually, I did buy something recently. I bought some baby stocks in Japan because I'm convinced that the Japanese birth rate is going to turn one way or the other. And obviously, if the babies start coming, then they're going to buy baby toys.
What has gone wrong in that market? I mean, why don't foreigners want to own Japanese equities that appear to be, on fundamental analysis, very good value?
Well, it's part of the Japanese don't want to buy them. The Japanese have been so burned over the past several years. Actually, before you can get a market to go up, you have to have the locals buying it. The kiss of death is when the foreigners come in and start buying a market. Usually the foreigners are the last. They come in at the top. In nearly any market in the world throughout history, they're the last to know. So it's the Japanese that won't buy, and they're very badly burned.
Do you think there are more problems in the Japanese banking system?
Well, there are more problems in everybody's banking system. Don't you watch CNBC? I mean, don't you read the papers, Jeff? I mean, everybody's got huge banking problems. I mean, America especially. America's got disasters on its hands, which it has not fully acknowledged yet, but everybody does.
Having said that, I mean, we were still a little surprised, I think, to get the news that we've had over the last few days from SocGen, that there was a trader in the bank that is perhaps culpable at this point for nearly 5 billion euros. Then they also tell us about the subprime exposure.
Well, it wasn't quite the trader. The trader was, if I read it properly, the trader was down €1 million or €2, and then the bank had started liquidating his positions, and they drove it down to 5 billion. He was only good for $1 billion or $2. They lost the rest of it for him.
We had a healthy debate about whether the bank should have gone ahead and liquidated the positions. Do you have any thoughts?
Well, I have no idea because I don't know what the positions were. Clearly, if he was long, they probably should have stayed because the market was about to turn. The Fed was throwing a lot of money into the system, so it was very, very, very bad trading on his part and then their part too. The issue is still, I think, for investors in equity at this point, just how much more bad news is there to come out of the subprime story in the European banks and other banks globally? Well, there's a lot more bad news to come. It's going to spread not just to subprime, it's going to spread to credit cards, it's going to spread to a lot of things. You know, now you have asset-backed securities with all sorts of things. The bankers, the investment bankers, have turned everything into a bond or to interest-bearing securities. So there's a lot more bad news to come, which doesn't mean we can't have a big rally in the market. I mean, what happened in the last 2 or 3 weeks in the stock market looks like at least a mini bottom. So we can have a big rally, but you better sell that rally.
So that's your read at this point, that we've got a mini rally for the market at this point from a bottom. Is that as a result of the reflationary activity we've seen from the Fed?
Well, it's part of that. I mean, the Fed is pouring gigantic amounts of money into the system. It's a terrible, terrible, terrible mistake, by the way, but they're doing it, so you can't fight huge billions and billions and billions of dollars. I'm a terrible trader, Jeff. You know that. I'm the world's worst market timer. But it looks to me like there was so much panic last week that we may be about to have a nice little rally, which I plan to sell.